Good evening, everyone. This is Tim Reset, bringing you another Monday market analysis. Jumping right into the ES, you can see we're hitting our head right against the negative 61.8 of the large 50% retracement from all the way back in November. And if you see, we'll draw from lows to highs. We broke out of the negative 23, and we're now sitting up at the negative 61.8. If I zoom in a little bit on the daily chart, you can see that we've bounced twice now between the entry at 1530s to the negative 23% target and then back down to that same entry to highs to give us a new upside target. Since we've just been bouncing from 50 to negative 23, what I've done is drawn from lows of 225 to highs, and that gives us an upside target of 1619s. I do see us going higher at this point. If we just quickly move over to the S&P on the cash chart, you can see that the high, the 10-year high of 1576.09s, that was acting as resistance, should then act as support. So I can go out to a 10-year chart and you can see that high that we have broken. And so from this point forward, I see us moving higher, breaking highs this week over the highs that we made from 2 weeks back, and then pulling back to the level of 1576. So that old resistance will then act as new support. So back on the ES chart, a target of 1619s gives us a next draw from lows to highs right at that 1575, 1576 level. So you can see how kind of projecting into the future, possible scenario of moving higher and then pulling back, we can see how the next potential long setup would line up with the new support level, that being the prior highs of the S&P. So that's one way I kind of look at support and resistance in conjunction with 50% retracements, because the more confluence you have, the more things that happen to line up, albeit coincidence, the more participants that are jumping on board in the direction of the trade, the stronger and the more violent that move will be. At the same token, the quicker and the more participants that are leaving the train, so to speak, that are jumping off board, the more violent and sharper the sell-off would be. So on the ES, we can go down to a 15-minute chart and take a look at today. Early in the morning, trading at a 15-minute long that broke out very early in the morning and set us up into a retracement, an extension rather, that traded to its target and then broke out once again, drawing from highs to highs. I was actually using the 7 o'clock high to highs, gave us a 1585 entry, and then from there, that same anchor point up to new highs is where we're sitting at the moment. So in the overnight session, the first failure point of this extension is 1586s. So that's what we'll be looking for to break in the overnight session. If we flip over to the euro, quite a bit different scenario. The euro sitting at its massive weekly, monthly long, whichever you'd like to call it, and then we've traded on the daily down into the first daily long back on the 24th of April. And now we started to move higher. We have a retracement above us that will kind of act as a magnet, pulling us up into the 3237s. We also have a target of the 50% long up at 3316. So two magnets, if you will, that will draw the market higher. And so for the euro, it's, we can go ahead and draw up this small daily short and see that it has broken. And because it's broke the 61.8, that validates the target once again of the long. So 33.16s would be the next target level for the euro in the long sense, if we were to forecast out and draw from lows to that 33.16s, that would give us the next long setup of 31.38s. What oftentimes will happen when you get in these scenarios where the market comes up close to a large short, doesn't quite make it, it pulls back to the long, what you'll see is we'll trade up to the negative 23% target, we'll pull back down to the next daily level, we may get a small bounce and then a failure of the 61.8. So I'll be looking for the next long setup. First I'll be looking for the target of 33.16s to be reached, then the next long daily setup, and then a failure of that daily setup. If we break through 33.16s and continue higher and break through 33.49s, that would be a failure of the full 50% retracement short, and that would validate the upside target for the long. So when we have a long trade and then the short setup breaks, that validates the long. When we have a short setup and then the opposing long setup breaks, that validates the short. $15-minute chart from today, just sitting in an extension from highs to highs. We did come down and pierce. First we had from highs to this lower high back here. That traded up to its target, and then that same anchor point to the new high is the extension that I'm using. We came down, traded in one tick through the negative 61, but I'm still using this failure of 30.82s as my failure point for the overnight session. And then this white dotted line I have here is just the daily pivot. So that's the open, high, low. I'm sorry, the high, low, close divided by 3 for tomorrow. And then I want to just touch on the YM. Looking at this is a 5-minute chart of the YM and nice breakout setup that we had this morning. At lows, 840, buying over the high of that bar, buying over the high of the candle in the YM. Same setup was on the ES as well, and then just trailing the bars, trailing your stop underneath the low of each candle. Took us up here to it was about 9:30 when I was taken out of the YM this morning. If we move over to the VIX, there's not a whole lot to talk about. We've still just have failed to get any sort of momentum to the upside and see that increased volatility. On the S&P, you can see how last week and the week prior rather, we had those nice large sell-off days, and we had the VIX spike briefly, but there really was no follow-through. So when we were back here in this scenario, things were looking quite bearish. Notice that we didn't take out the prior swing low. So while they were looking bearish on the very short term, that is, these last two daily bars had very strong volume, there was really no action to take because we didn't get a significant breakdown of the low. I think we pierced it by a couple cents on the spiders, and then immediately turned around and started to rally. So when we get into these scenarios, one thing that I like to do is, while we did have strong volume to the downside, and then when these kinds of days happen after a long up move, you get the media chiming in and talking about how this could potentially be a top. Are we going back into a recession? All of the hype and things that come with the talking heads. And that's a great opportunity to look at longs when the market is suppressed. So buying over the high of this candle, looking for stocks that are bullish in this scenario when the broader market is acting bearish, is a great opportunity to get into those long positions, because if you're wrong, there's a quick stop point just below the low, but if you're right, there's a great potential to get in a trend nice and early and then ride that trend to new highs. So that's the SPY, the Dow, pretty much the same scenario. We had those a little bit stronger volume on the bearish days, but then followed that with strong volume on the last couple days of this rally. The Nasdaq also looking very strong, already broke out of its highs from last week. And finally, the Russell. Russell's a little bit surprising that it's lagging the group, and we have had lower volume on this rally. So I'll be watching the Russell. If the Russell does start to break down, I would be looking for more small cap stocks to be shorting. In terms of individual stocks, we were talking about gold a couple months back, and I know it's slipped off a lot of people's radar. It's just kind of been in the media just because of the the recent gap down, and you're hearing people talking about, is it time to buy gold? Well, if we go out to a 5-year chart, you can see we broke the negative 61.8 pretty significantly. We were trading at the 50, holding that support level. And then we broke, so what I'll be doing is drawing from highs to lows and looking for a test up here at 157s. So that would be the, again, kind of that magnet to bring us up higher, and that I would see being a resistance level of 157 and a potential short-term shorting opportunity. Apple, big name that's been in the news recently, a lot of action going on. Now with Apple, I have the 50% short drawn up, looking for a break in Apple of 438s, we'll call it. And once we do get that break, we can draw from lows to whatever those highs end up being and take the first daily long if you are trading either the underlying or trading options on Apple. A couple other names that I've been looking at. Amazon, also trading at its 50. Now Amazon's come down and tested a couple times. We had earnings the other day and strong volume to the downside. So failure level on Amazon looking at 243 rather. But again, we are at support. So if you're looking to get in an Apple or Amazon position, it can be a little bit advantageous to put an order above the high of this candle. And while everyone might be thinking, Amazon is going to start to tank, if you place your order above the high of this candle, all of those people who were looking to sell or have already put on short positions would then be looking to, they would be underwater and they'd be looking to exit their position, covering their shorts, and that alone could send the stock higher. So not looking to buy prematurely at just a random level, looking to buy above the high of the low bar. And then a short idea I have here is AEM, looking to sell below the low. Nice little consolidation pattern, so you can put a stop above the high and a sell stop below the low. Nice volume to the downside, already announced earnings, and it's in a nice downtrend. Later this week, on Wednesday, we have the FOMC meeting announcement at 1 o'clock Central Time, so keep that on your radar. I typically will not trade, I will never trade around just before, or just after the announcement, and typically I'll be flat of my day trading positions into the afternoon on that Wednesday. Thursday and Friday also quite a heavy news day, so a lot to look forward to this week. We do have 3 weeks till options expiration, so if you are looking to put on new positions, I think it's still okay to jump into the May contracts for positions that you're looking to hold for maybe a week and a half. Anything longer than that, you may want to consider going out into April, just because of the way that, going out into June, just because of the way that the month falls. This week being the first week of May, and then we're already within that 3-week window for the option contracts. So with that, I'll be posting some new videos, longer videos, webinar type format to the dashboard in the month of May. So stay tuned for those, and I hope you're having a wonderful spring and looking forward to some warmer weather and getting outside. Hope you all have a great week. Any questions, feel free to contact me, eminimind@gmail.com. Thanks a lot.